Hey everybody, and it's time for this week's Mortgage Minute with Tatiana from Prosperity Home Mortgage. Hello, my friend.
Hello.
Hello, my friends.
All right, naughty hat or naughty hat?
Naughty hat.
Naughty hat or nice hat?
I don't know, a little bit of naughty hat or
Uh,
no hat at all. Let's see what I have.
Okay, what's going on?
Yeah, so as you can see here on the chart, the rates are still showing at 6.25%.
Mhm.
Average rate for conventional conforming, and I'm stressing out conforming because high balance conforming, which is over 806, what is its new number came out, actually 802,650. Once a year they increase the limit, so now it's going to be 802,650. I'm still learning it. I'm trying to memorize it, but they come up with this random numbers.
Yeah.
But when you below within that amount, that's conforming loan limits. And here you can see that this scenario is based on 780 score with more than 40% down payment.
Okay.
The rate is 6.25. Once you go above that conforming loan limit, the rates are gonna actually go higher. Everybody was wondering, so what's gonna happen? Everybody was hoping that rates will go down once Fed cuts the rate. The rates went down before Fed cut the rate, just in anticipation of that, and they did like pretty generous cut of 0.5%. But since then, actually rates, we can see the tendency of rates going up. I am quoting clients with 5, 10, 20% down payment, 6.5 right now.
Okay.
Okay.
Yeah.
And so would you recommend someone go ahead and lock their rate at this point?
Yes, absolutely. If they're purchasing within, next 30 to 45 days, I recommend locking in.
Okay.
Yeah.
And so my understanding, and I don't want to go deep dive into this, but my understanding is the interest rates, the mortgage rates follow the treasury bond. Is that the 30-year?
They follow the 10-year treasury yield.
10-year. Okay, 10-year.
That's what they follow. Yeah, and when it goes up, the rate goes up.
Got it. Okay, 10-year treasury bond. Okay.
And I have a quick question too. You said that they changed the number on the conforming rate, right? To go to high. Did they change the number on the jumbo, which was like, wasn't it?
Yeah, so there are a couple of tiers. We have conforming, high balance conforming, and then we have non-conforming, or as everyone knows, as jumbo. So the limits vary depending on county. In our immediate DC metropolitan area, we have high cost of living, so the conforming loan limit, they just increased to 802,650 from 766. What was it? 766,550. So they increased it some, but they actually, and then once you go above that, you can have it's going to be high balance conforming, and that's up to 1.149 850 in our area.
Okay.
I'm sorry. Yeah, 825. Yeah, so 1.149 825 in our area. They didn't change it this year. They kept it the same, which is a little bit surprising to me. I was hoping they would, but they didn't. So, and then once you go above that, that is going to be a jumbo financing.
Okay.
Okay.
That was a pretty good change they did last year, though. A pretty good jump.
But yeah, it's actually jumped from 1.89 300 to 1.149 825.
Yeah, that was.
Okay, awesome. All right, so that's it. Just all bad news about the interest rates. Not really bad news. It's still good rates. Yeah, it's still good rates. So
We Yeah, keep in mind, they did a good thing, you
Yeah,
know,
leading up
before.
to it. Yeah, absolutely. Okay, all right, so
I have a
Kelly,
question.
yeah, go.
So you know how we all get the postcards in the mail? Well, we got another one and it was from a lender who said, wow, check out these rates that you qualify for in Fairfax County or whatever. And it was crazy low, like not rates that I'm seeing on our charts or seeing in the really real world. Can you explain what these postcards we all get are all about? And they talk about APR and interest rates and everything. So please, please, please tell us what's up with that.
Yeah, so those are eye catchers, right? You have to throw something in there that would keep people's attention, gets their attention. But what's behind those rates, you need to read in those small fonts. And you know, the interest rates, they depend on, you know, the fact that you're a first-time home buyer. Even if you're a first-time home buyer, typically you get low rate, but what's your income? If your income exceeds certain amount for the area, then the rate is gonna go up. I just have a client that, you know, I was quoting 6,125, first-time home buyer. He was looking in certain price range, then he started going up, where he needed a cosigner because he wouldn't qualify on his own. When I added the cosigner and cosigner's income, it went to completely different tiers. So now the rate is 7.5.
Oh,
Oh,
wow.
wow.
Oh my gosh.
So it's, you know, those little nuances, they're not gonna advertise there. They just need to advertise something that can catch your attention. But
Get you to
what
call.
people need to look at is, you know, what the down payment here, like right here, see it's 6.25, but it's showing 780 score and more than 40% down payment.
I know, who does that?
I'm sorry.
It's like, who does that? Not many people are able to put 40% down.
Exactly, and it doesn't give all other details like I just described, right? First time buyer, what's your income, and such. And you know, and you need to look at if it's going to be a fixed rate, or is it maybe 10-year fixed, advertised, or 15, you know, because those have shorter terms, they have low rate, or maybe it's adjustable rate mortgage, which some lenders offer. Even 1 year adjustable rate mortgage is going to be a low interest rate, but you know, it's super aggressive, could involve a bunch of points in there, and points, discount points is something that you pay to get lower interest rate. So what you need to look at, you mentioned APR, right? So APR is the indicator of what the closing costs might be. So let's see, I just have this, happen to have this chart.
Hey.
So the interest rate is the cost you will pay each year to borrow the money, expressed in percentage rate, right? It does not reflect fees or any other charges you may have to pay for the loan. So the APR is the broader measure of the cost of borrowing money than the interest rate. The APR reflects the rate, any discount points, mortgage broker fees. That's another thing, that what are their broker fees or origination fees, and other charges that you know, could be paid to get that loan, which is a closing cost, right? So when you see the difference between, there's always going to be difference between interest rate and APR, unless seller covers the closing cost 100%, right? Then it's going to be the same. However, you know, what could be included? Mortgage insurance. If you have mortgage insurance, or, you know, mortgage insurance premium, that's part of APR. The origination fee, or some, you know, companies charge processing underwriting fee, which could be 1-2% of the loan amount. That could be pretty expensive. The title company fees, some have application fees, and you know, some other things. But the main thing that you need to look at when you are getting a quote from a lender, you need to look at, are there mortgage premium? Is there discount points? How much origination fee? So I might quote someone 4% interest rate, but I'm gonna charge them 7 points, and that's gonna be a lot of money. So
Yeah,
you just need to really look deeper into what is actually what they offer and is actually available. And in a small font, you can always read, it says there, you know, the real rate might be higher, might be different. They apply to find out, but it's just something to catch people's attention and
Right,
yeah.
right.
I have a two-pronged question. Number one, maybe more, maybe less. Number one, is it safe to say that if you look at one of these cards and they have like a 4% interest rate, they have to disclose an APR, correct? Based on how they got that 4%.
Absolutely.
Okay, so that's a safety check. If it's 4% here, but then the APR is 7%, you know there's a whole lot of fees in there. What is an appropriate spread to know that you're within reason of it's just closing costs or something like that? Or can you even give that number? Is that something that you can calculate?
The typical would be maybe 0.5% difference.
Okay.
Oh,
okay.
wow.
So if it's a 4% and it's a 4.5% APR, then you're like, hey, this might be
That's
legit.
reasonable.
Yeah.
Yeah.
Okay.
Okay.
Okay. Makes sense.
Exactly.
Yeah.
I like it. I like
Yeah. And if somebody gets the mailer like this and they don't disclose APR, they can report them because that's violation. They cannot
Okay.
do something like that. That's misleading information.
Yeah.
Yeah.
It's like a bait and switch.
Yeah.
Or it's
So-
like those big juicy burger ads. They show the burger all big and wonderful, but they don't show what I look like when I would live on the burgers. They don't show me like post eating those burgers all the time.
Or it's like
It's
that.
like expectation and reality, right?
Yeah, yeah. It's like that restaurant we went to, remember Copeland's? And they had the big old jumbo shrimp and we ordered the meal and it
Oh,
came out
yeah.
and it was the little
And I'm
steamed
like,
ugly shrimp.
This
Yeah,
is
it's
like
like-
little salad
And
canned
you're like,
shrimp.
that's just what it comes with. Anyway,
You didn't just name them.
I think they went out of business. That's
Oh,
why I
okay.
can say
It
that.
was Copeland's then.
Copeland's in Pensacola, Florida. All right, okay, well, that's really
Yeah.
helpful. I appreciate that. We
Yeah.
had another client reach out to us about a potential refi. And they were like, how do we know if they're telling the truth? And I'm like, you gotta get the loan estimate, then you gotta go talk to Tatiana and see if it's like what they're
Compare.
hiding and yeah. So I didn't realize we had that litmus test that we could do like right there. So that's good.
Yeah, that is really good to know.
Yeah.
All right. Thank
Okay.
you.
Yeah, thank you
Thank
for
you,
that.
guys.
All right.
Good
we'll see
questions.
you-
Keep
Yeah.
them
well-
coming.
Hey,
Yeah.
next week,
Oh,
if,
and yeah.
go ahead.
I was just gonna do her phone number and stuff. but
Yes,
you
yes.
first.
Next week, if the interest rates keep ticking up, can we talk a little bit more about the mechanism of how people can kind of try to maybe actually be able to tell what's going to happen?
Definitely. Good
Okay,
idea.
great.
Mhm.
Okay. All right. Go for it.
If you need Tatiana, you can call or text her at
571-245-3000.
There we go.
Okay.
All right. We'll see you next week.
Bye.
Bye.